Hi, Vandana. Thank you so much for coming to the Investor Talk. How are you today?
Thank you, Max, for having me here. And I'm very grateful that I have got this opportunity to have this interaction with you. I'm doing absolutely fine. This is the festive week in India. It's a celebration of Diwali for the next 2 days as well.
Yeah, you're right. I forgot. Yeah, that's true. So you are under celebration now. Thank you so much for coming. Before starting our talk, let's give an introduction to yourself.
Yeah. So I was in Singapore and Jakarta for 15 years in investment banking, and I had my own family office fund there. This is essentially my 8th year back in India. I did investments, then I went back to advisory. I'm now connected with 400 plus global investors. We pick up global as well as Indian deals. In total, I have done 165 investments in more than 35 countries in my 8 years of journey. We are sector agnostic. Typically, we do $1 million to $100 million deals, which includes deals for startups and VC funds as well. Apart from this, I have given a 350 plus talks that can be seen on my website. I was the top 10 women leaders in wealth management 2021. My brand comes under the top 10 women entrepreneur brands in India. Convanto is also the top 10 consulting firms in India led by a female founder. I'm also the Woman Entrepreneur of the Year 2021. In Jan, I was awarded as the top 10 futuristic women in India. And in February, Dr. Kiran Bedi has awarded me as the best financial institution in supporting startups in India. In August, Amazon has released a book, Eves Against Odds, that covers stories of 25 inspiring women entrepreneurs, which has reached our Prime Minister and the Finance Minister. And this book covers me up as well. And in August, Outlook Business Magazine has covered me up. So this is a small introduction about myself.
Well, I mean, for what I can see, you've done a lot. My compliments. Well done.
Thank you so much.
Let's start talking a bit more about how do you invest. So let's start with geography. Where do you prefer to invest money?
So when I came back to India, I did some small investments in India. Then we went back to investment banking. So if I had to invest, I would, of course, invest in either India or Singapore.
Okay. So can I say East Asia or primarily India and Singapore?
India and Singapore, I think, works better for me. Yeah.
Okay. And normally, how much do you invest?
So if on my personal capacity, I can invest from 200K to 500K. But if you ask me, investments from other investors that I can bring on board is 1 million to 100 million that we do.
And in terms of stage, where are you investing? Early, late stage? What do you prefer?
We do prefer companies that come to us from early, middle stage to late stage as well. So in early also, we see the background of the founder. We see what technology they are bringing on the table. And if there is any revenue that they are generating, then we would invest. We also do investments in mid-size, large-size companies as well. They are already doing well in their space, but we don't do idea stage.
Okay. So no pre-seed, for example.
Yeah, no idea stage. Like if the MVP is not ready, we won't do. If it's a bit task.
I do believe it's very challenging investing in idea stage. Almost there is nothing except founders to talk to. Let me, as you invest early, for example, let's take the early stage, because many people watching this, many founders watching this interview, they are pretty much early, let's say in a seed pre-A stage. What are the top concerns and where do you find conviction when investing? What do you look at the most? The company, the team, the product or service?
Yeah, I'll tell you. I look at the founders, you know, and the team is complementary or no, and if the founders are humble or now, humble doesn't mean being submissive. Humble means able to pivot, being able to, being grounded. So, first we look at, of course, the founder, uh, you know, then the complementary team, then the product, then the revenue. These are the stages where we look at what is it that they are bringing on the table that is disruptive. What is it that they are doing that is disruptive? So that again is the second factor. The third is the revenue. The revenue comes in the end.
Before the pandemic was crucial, meeting founders face to face, sit down and talking, and after came what has been an absolute disaster. And we learned to move to video, Zoom call, any kind of call. Anyway, remote video call. How do you find, for you, it's absolutely mandatory meet funders before investing, or you can go, for example, in a full remote closing deal where you meet the funders online, you actually invest even without meeting them face to face?
So I think, it's all about being proactive and progressive. I'll give you three examples that there was a point in time when demonetization happened in India. People didn't know how to use Paytm, Google Pay, all these digital, currency, the digital exchange platforms. And when they were forced to use, now the vegetable vendor, the milkman, the taxi man, everybody uses it. So it's convenient now for everybody, and it is a smart way of living. Similarly, when the pandemic hit us, many of us didn't know how to use Zoom, StreamYard, AirMeet, all these platforms. And then we were pushed to use these platforms, and we understood that this is how it's going to be for the next 2 years. In fact, I did maximum work by sitting on this chair and, closing things really fast. So, I think it's also about the mindset. uh, you know, Meetings can happen online, meetings can happen offline, but it's also about the mindset. There are other ways to do due diligence, of course, with their documentation, with their network. It really doesn't matter if the meeting happens online or offline. In fact, online is much better. You finish off things fast.
Yeah, I mean, you're right. The beauty of going online is you go much faster. You need to fly to move, so there is a lot of time that can be left for working.
Yeah.
Instead of moving and traveling. That's absolutely, I completely agree. How often do you like to meet funders before and after the investment, online, offline, whatever?
Uh, we do meet the founders at least 2 to 3 times. Sometimes 4 times, and that's the general process. Uh, but not more than 4 times and not less than 4 times either. So approximately 3 to 4 times.
And how involved do you get with your portfolio, with your funders? How active you are?
We actually have a lot of skin in the games of these founders. We do get involved a lot. We inform them that this is the things that are coming up. These are the latest technologies that have come up. When we invest, we come in with a lot of technology team, a marketing team, a network. So it's important to get involved, not 90%, but at least 50% or 30%, because you get to know uh, what's happening in the company so that it avoids a lot of backfall suddenly. Some investors, they just leave their portfolio companies, they're not interacting with them, and suddenly there's a backfall. And then the investor has to rush and, safeguard them. So I think that's important.
Thank you. Do you like leading or follow investments?
Leading.
So you prefer leading.
Yeah.
When investing in startups, in case they are early, you need to follow up, okay? And maybe they need introduction for new investments coming from new investors. Are you going to help them, and how?
Yeah. We help them with end to end everything. Once we are aligned with them, we help them with almost everything. We don't just uh, leave them. Of course, then it's the founder's decision what they want to do. But we do tell them, look, this works, this doesn't work.
As you have many investments done, should the investment themselves in some kind in your portfolio play together, having some interactions to an extent? For example, corporate venture capitalists, when they invest, the logic behind is also that the startups should have some kind of interaction working together uh,
Yeah.
in the portfolio. So is something that applies to you?
Yeah. So we are very interactive with almost everybody in the ecosystem, whether it's our portfolio company, whether it's not our portfolio company, whether it is our funds that we are interacting with, whether it's our teams, we interact all the time. And we in fact have weekly meetings with the founders where we take regular feedbacks. Sometimes even in a week, we have two meetings where we inform them about everything and they inform us, and then we take a call how to take things forward, how to map them, where to take them, how we can help them. So we deep dive into the system, but of course, the founder also has to have that drive and play a role. It's not just the investors, but it's also the founders, how much drive they have, how much passion they have for their baby, you know, at what level they want to take us, how much money they want to multiply.
We've been talking before, you just touched for a second pivoting. How important is that funders understand that when time to pivot arrives, they had to pivot because maybe if they do not pivot, they're going to fail.
It's very important. Sometimes founders play everything from their ego and their emotions. They are not making rational and practical decisions. That's why I always tell all the founders, before you start, read the book Power of the Subconscious Mind. It will keep you centered. It will keep you, calm in making decisions. When we start making decisions from our ego and not from our practical mind, then there is a likely chance to fall back. I mean, it's absolutely fine to pivot. It's absolutely fine to make a change. Maybe that business would grow better. You never know. So I think many founders are also afraid of failure. So, but failure is a stepping stone to greatness. I think that's when you understand that part, you would really grow and you would be able to pivot very quickly uh, and grow back again.
Fully agree. I mean, I do believe pivoting is crucial. If you do not understand when to pivot, I mean, you are very much risking to close your company very soon. So
Yeah.
I totally agree. And they should be cold enough to be very rational. Why did you become an investor?
Since my childhood, I was most very rebellious person and didn't want to stay in a box. Uh, you know, so for me, different startups, different technologies, learning about different founders, reaching to that level of being a businesswoman excited me always. So, I always wanted to become one and be able to do things in this space. most also because there are less women in this space.
Yeah.
And because I've been able to achieve, I want to encourage other women to take up this space as well. And because they are definitely women are able to manage money. Definitely, they can also do things. It's just a matter of believing in yourself. So I think that's the drive in me that pushed me towards it.
Which are the critical points that trigger your decision ultimately to invest? What do you look for in founders?
Many founders, they don't look at what is the market opportunity in their startup. That is one thing we always look at: the founder's background, education, what is the network that they come with, if they are bringing anything disruptive, and whether that's a massive opportunity or that we look at. And of course, at last, we do look at revenues, whether they are coming up with more projects, bringing in more revenues, they have some revenue already, and what is it that they are doing, which is exciting their customers, and how engaged they are with their customers. I think that is what we look into, whether they are listening to their clients, they are following their clients, because ultimately their clients would bring them the returns. So that's what we look into.
I mean, if there is any, what can be the perfect recipe for a great pitch that can convince you?
We make a lot of pitch decks, financial models, valuation, and business plan. We understand that an investor don't spend more than 90 seconds on a deck, essentially. So we have created certain formats where we help founders to make their pitch really short, crispy, and to the point. When I look at pitch decks, I look at the information, whether it's up to the global market standards, whether it's, more numeric than more, texty. That's another thing that I look at. I also look for a video pitch always when anybody pitches to me, because that gives me an idea about the founder, about what they are doing, what they are talking. So it gives a face to the pitch deck that we have. In the pitch deck, it's very, very essential to cover up certain slides like the market opportunity, their customer acquisition cost, essentially their unit economics that helps us understand things really fast. What founders do is they tend to not cover those areas. They forget to put their ask in there, usage of the funds. These are the things that we really look into a pitch deck for. And of course, the team.
What about intellectual property? Is it very important for you to invest?
Yes, yes.
To the founders.
Yes, yes. Very, very important. I think that's very, very essential. We do look at that as well. More often, it's also whether there are many companies that they come up with such unique things, but they have not taken those rights. So, everything gets copied very easily, whether it's international market, whether it's the Indian market. So it's essential that they come up with those rights, because it keeps everybody safe, not only just the investor, but the founder and, the other competitors as well, wouldn't be able to copy so fast.
But let's say a platform not having the technology, but having the model, which is very strong. But again, many platforms, they don't hold the technology at all. Actually, they borrow, they take the technology from outsourcing and they apply it to their business model. Is this something that can appeal you can invest in?
Yeah, definitely. Later on, we can do the other processes.
So, definitely. Let me close with this one. Where do you see the future in venture capital? What can be where founders should start a new venture in the coming years, where you see a lot of money going and a lot of valuation going?
You mean the sectors? Which
Yeah,
sector?
yeah.
D2C brands, fintech, definitely. Health tech, I see a lot of money going in. Web3 is now coming up. So I think these are the places where I see a lot of money going. SaaS-based platforms, uh, definitely one looks for such things. EdTech is also still there. It's not completely gone. Agri-tech,
I see in India where you are very strong support to agriculture. Yeah.
very, very, very strong support.
And I do believe technology can help agriculture and to develop, be more
Yeah.
resilient.
Apart from this, also, AI, robotics,
Yeah.
IoT. These are some of the sectors that are really hot and coming up. And, we can really implement these in our day-to-day lives and keep it everything fast, cut short. And otherwise, we are still into those processes of lot of paperwork, other stuff, I mean, at the time of pandemic, I learned some hacks or to order food and all that, Mm, with tablets and medication. So I think we need to know more of those hacks.
Absolutely. Vandana, thank you so much for coming to the Investor Talk. It's been a very great pleasure for me, and I hope I have another talk with you as soon as
Thank you so much.
Thank you so much.
Thank you, Max, for your precious time. Have a good day.